We are 2.5 hours into trading. It is Monday morning, March 29th. Hello, traders. Let's take a look at a few things that happened on Friday. We had a big sell-off in DISCA. You know that a hedge fund was going under. I had a lot of members asking me, Pete, look at this drop. Holy cow. How can we trade this? What's going on? I didn't know what the news was. I had no idea what was happening. I said, look, all we have to do is try and identify a point that we would like to buy the stock at. So I'm going to put up the chat room. I want you to see that this is actually happening. These are posts in the chat room. And you can see that the post was from 326, and this was a couple of hours before the close. I'm going to pop up this chart so that you can see it better. And there's the chart. What I had mentioned to everyone was, look, if you think that this move right in here was all fluff, where would you like to own the stock? I mean, we had a gigantic fall in it, and option implied volatilities were skyrocketing. The stock was breaching the 100-day moving average. No one knew what was going on. So look, would you like to own the stock down here? This is major technical support. You can see that before any of this rally even took place, the stock was very happy down here. Would you like to own it long term at that price? If the answer is yes, then you could take a look at the April 16th 2250 puts. And you can see that they were no bid, offered at $2.80. Well, we can improve that ask, and my strategy here was let's put a $1.50 offer out there. Let's see if we can get filled. It's much better than what's currently out there. And at a $1.50, what would my downside risk be? My risk would be that I'm assigned at $22.50 on the stock. So I own the stock at $22.50, but I do get to apply the $1.50 credit that I sold the puts for. $1.50 puts me down to a $21 entry price on the stock. Look, that's even below this level right here. We would be buying the stock way back here. I think that's a pretty good do. And what would our gain possibly be? Well, these 2250s, you're going to have to put up 20% of the short strike price. So in this case, you'd have to put up $4.50 per contract. Well, if I'm getting a $1.50 in, that represents a 33% return in the course of 3 weeks. Are you willing to take that risk? If the answer is yes, this was a fantastic opportunity. So we're looking for opportunities like this, but sometimes you just have to step back and use some common sense to find opportunities like this. So if I go into the current view of the stock just to see where those options are, those 2250s, April 16th expiration, look where they are. No bid, offered at a dime. And the stock has actually recovered. It is now back above the 100-day moving average, and you can see that big fall right in here. So the stock has found its footing for right now. Would I go out and buy it? I don't know. I'd have to see a little bit more of a base in here, but we know that there was some margin liquidation, and that's why the stock fell. So we're going to take a look at some setups right now. We're going to take a look at the market. I'm going to try and find a stock that I think sets up well. But what I'd really like to encourage all of you to do, please put some comments in the comments section of this YouTube video. I don't always want to be just spoon feeding you trades because a lot of you are able to watch the video at night and you're not able to watch it during the day. It takes me a while to render it. So the stock picks that I put up, oftentimes you're not able to take advantage of. I'd rather focus on other educational issues. Maybe it's assignment, maybe it's how to structure a spread, anything. Maybe it's technical patterns that I like to trade. Tell me what you want to hear, and I will try and do a video the next day on that topic. I'll go through all of your comments, and I'll pick the one that I think would appeal to the most of you. And in fact, as you've watched the video, look at the comments. If there's one that you like, give it a thumbs up. When I see a particular comment with a bunch of thumbs up, that's probably going to be my topic for the next day. But I need you to help me out here, and I'd be happy to provide any educational content that you'd like. So let's take a look at what the market is currently doing. First, let's zoom out, take a look at the daily chart. Let's put up our major moving averages so we know where they come into play. Last week on the S&P 500, we tested the 50-day moving average and we bounced off of it. There's your 50-day moving average. Beautiful bounce, downward sloping trend line, broken to the upside, possible bullish flag formation here. Not the type of bullish flag I would like because the flagpole is so short. And actually, this is just 2 steps, 3 steps forward, 2 steps back, 3 steps forward, 2 steps back. But the upward trend line is still intact. Earnings season is coming up in another 2 to 3 weeks. That usually attracts buyers. And we've got lots of economic releases this week. So we've got ADP, ISM manufacturing. We've got the unemployment report Friday, which, by the way, the market's closed Friday. A little unusual to get an unemployment report when the market's closed, but that's how this is going to play out. I think the jobs numbers are going to be good, and the threat of a Fed rate hike is minimal. They've been pounding their fist on the table, saying so. So we are in a sweet spot as far as I'm concerned. Valuation's a little rich, but we've almost got another quarter of profits under our belt. Coronavirus subsiding, states starting to reopen. I think the market is going to move higher. So I am neutral to moderately bullish in here. And I feel that over the course of the next 2, 3 weeks, that market bid is going to strengthen. Let's take a look at a 5-minute chart. You know, I've been talking up the 1OP indicator. It's all I use to trade the S&P 500. You can see Friday we had this cross right in here. It was bearish. It was a little bit early, but as the indicators started to come in, we got a little bit of a dip, but this was the cross right in here. You get your bullish cross right here, downward sloping trend line, breaking out to the upside. This is a massive bullish engulfing candle. That is what you call a key bar throughout the course of the trading day, and then lift off. The market was super, super strong on Friday, so naturally, we're going to give back some of those gains. Plus, over the weekend, we learned of the hedge fund liquidation, so that had everybody a little bit back on their heels. And you can see you've got this bearish cross on the open this morning right in here. And let me put the crosshair tool up so you can see where that comes into play. And there's your bearish cross. We get a little bit of a market sell-off, and now we start getting a nice bullish cross right in here. Take off. Now we're getting a bearish cross. We get a little bit of a pullback. What do I see unfolding for today? Well, buyers are going to be very aware that that 50-day moving average held on the SPY, the 100-day moving average held on QQQ. So they are going to be looking to nibble, to buy, and that bid is going to continue to increase for the next couple of weeks. So we are likely to find some support. Now, today, we've got this support level right here. What I would like to see right now is a higher low. I want this little bit of a pullback to be quickly resolved and for the market to be able to edge its way higher. In fact, if you watched my video from Friday, please go back and review it. Make sure that what I say is true. I had told you that based on this price action, the first 2 hours, I felt that the market was going to test that support level, but ultimately get through this resistance and close on its high and make a new high for the day and set a positive tone for this week. So please go back, verify what I say is true, and work on your confidence in my research. It's very important that you go back and verify everything that I say, everything that anybody on YouTube says. Go back and verify it. Get your trust up, get your confidence up, and then you can start to really learn and all the walls kind of come down and you can really start to kind of appreciate all the techniques that I'm going to be showing you. In any event, you can see how the market's pulling back. We've got to make a higher low here. If we come back and we test this level, and then we kind of float around and test it again, that will be very vulnerable to triggering sell stops. What do I mean? Well, once you test a level like that, like here, 1, 2, 3, you break down here the fourth time, this is to trigger those sell stops because you have buyer, 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 all layering up on that same bid. And as soon as they tried to trigger those sell stops, they flushed some people out of their positions, but buyers ultimately knew what they wanted to do, and you get this long green engulfing candle. We could see similar today, so watch for that type of pattern. Kind of test, 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 flush down, and then get that big bullish engulfing, and then you're off to the races. Now, if this had happened last Friday and we got Doji, red candle, That's no good. That means that, yes, sell stops were triggered, but that the market is now heading lower. So this would be a critical juncture. I don't even want to get to this point. What I would like to see is market comes down, forms that support, forms a higher low, and then takes off like that. I don't want to have any of this in there because there has been some nervous jitters over the course of the last few weeks, hence the stair step move higher. Test, test, test. Constant tests along the way. And that's why you can't just outright be long calls. You have to be selling out of the money bullish put spreads and looking for those strong stocks. So let's go through some searches. Let's find them and we'll see what we can pick up here. We're going to go right into we'll go into Pop Bull. That's one of my favorite swing trading searches. HGEN. Not bad. Downward sloping trend line. Violated to the upside. I don't like the big candle up top here, this big wick. I would like to see the stock move higher and hold all of the gains. So pretty volatile move. Facebook has been really choppy. There's nothing I really like on a chart like this. I want to see nice, steady movement higher. Costco, bit more constructive. There you've got a higher low, and this is when buyers get more aggressive. You have this initial pop, then the stock starts to pull back, and buyers are going, gosh, I liked it here. I don't think I'm going to have another chance to buy it down here. I better start buying it here. Off to the races through the 200-day and the 50-day moving averages. Costco looks really good. You've also got this downward sloping trend line right here, and you can see that that intersects around these major moving averages. Also violated to the upside. Maybe a nice bullish put spread candidate keying off of maybe this 335 level. You're not going to be able to get all the way back down here because you're already at 355 on the stock. So you can't go too far out of the money and expect to get a decent credit right now. But I do like Costco. That looks good. Here are some of the stocks that were on the list Friday. So this is Pop Bull from Friday. But today, these stocks are back on the list and they have traded higher than that previous close. J&J actually looks quite good. I'm going to continue to go down the list here. There were a couple of others that were popping out at me. Cisco's been strong. Caterpillar should do well on any type of infrastructure build out. And that's been on the list a bit. We've got Home Depot. And let's see what else we've got here. Let's see. I've got, I think J&J looks excellent. J&J could be excellent. And let's see if we can find one or two other stocks. I'm going to go into the heavy buying list. And we're just looking for those technical breakouts. This is not bad. So here's how I would approach ATVI. 1, 2, 3, 4, 5. Really nice horizontal support. 100-day moving average coming into play right here, right about the $90 level. I think selling an out of the money $90 put on ATVI could be decent. So we need to make sure that we check the earnings date, and we'll hover over that. And earnings are on 5/4, so we've got a few expirations that we can lean on. Obviously, I'm going to want to go as near term as possible and go into the April 16th expiration. So let's take a look at where those options are currently lining up. And we'll go into maybe an 89.87 bullish put spread, and there's the 87 strike. So I've got $2 between the strike prices, so I typically like to get 40 cents for that. You can see the spread is 10 cents bid, offered at 40 cents. We're not going to get the price that we want, at least not on the April 16th expiration. And I do want to get down to that level, so it's important for me to distance myself from the action and make sure I've got as much technical support as I can. And so let's go out to maybe the April 23rd expiration and see if there's anything that we can take advantage of there. Again, 89, 87. Better reset this. 89, 87. And there you can see that spread is 18 cents bid, offered at 77 cents. So that looks like it might be possible at 50 cents. You'll need to work it a little bit. I mean, the stock is fairly choppy, you can see, but I like this base. 1, 2, and you've got that support, and you've got the 100-day moving average. If the stock breaks out above this 50-day moving average on decent volume right here, then I think that you can even come in a little bit closer on this spread, knowing that you've got that support to lean on as well. But as it stands right now, I kind of like that spread right there. That was the April 23rd expiration, selling the 90, or excuse me, selling the 89, buying the 87, and doing that for a 40-cent credit. You're going to need just a little bit of help from the stock. You might be able to get that filled today, but that's the type of trade that I would be looking for. Really nice support in here. So we'll see. Twitter's been strong today. That also might set up well. Again, these are on the heavy buying list, but you've got to get through this downward sloping trend line right here. We're not through the 50-day moving average, so it would not be of interest to me. And let's take one final look at QQQ, and I'll make a final statement on that. You know that on Friday, I had mentioned we have this downward sloping trend line on QQQ. I love the test of the 100-day moving average with a higher low, but as far as any of the tech stocks, we need to be able to get through this downward sloping trend line. Once we do that and we close above it, we'll be right on that 50-day moving average, and you will start seeing me put some tech stocks in the weekly trades or in the daily trades. My final note, please put some comments in the suggestion area. Tell me what types of option education you'd like to see. When I see those comments, I'm going to pick one from them, and I'm going to go with the one that's probably got the most thumbs up, or the one that I think will have the broadest appeal. And that way the content that I produce each day won't be as time sensitive, but I'll still try and find some good trades along the way. Thanks. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.